Okay, so I realize you're an absolute beginner, but this is going to move fairly quick. My intention is that you can pause the video, rewatch things, take notes at your own pace. But by the end of this video, I want you to be able to place your first trade, to understand where you're going to place it on a very, very simple strategy. This is not going to be your final strategy. By no means is this going to be the strategy that you likely end up finding consistent profitability with. It's just something really simple so that you can understand trading better and so that you can practice doing some trading. Now, it's going to be out of a paper trading account. It's a simulated account. So no need to have a brokerage or anything like that. I'll show you how to do it right here on TradingView. So let's start with technical analysis. Technical analysis, as I mentioned, is very, very easy. What we're going to look for here, this is the SPX. So this is that major index we are talking about that tracks 500 of the top stocks in the New York Stock Exchange. You don't trade the SPX. Show you here. So this at the bottom here, this is volume bars. This is how much volume traded. You can see there's a number at the top right here that moves, and that actually tells you how many shares were traded during the day. That's volume. This chart we were originally looking at does not have those because this is the actual index. It doesn't trade shares. It's actually just math. That's all it is. It's math as the stocks that are included in this index move up and down. They're all calculated together, and the index moves according to the way the stocks move. So it's just an index. If you want to trade the index, this is how you trade the index. It's called an exchange traded fund, and it tracks the S&P 500. You can see it's roughly 1 to 10, somewhere in there. It's never exact, but it's pretty close. So this is how people generally trade the S&P 500. Let's start doing some technical analysis. It's almost overly simplistic. If you're not familiar with it, it's just basically lining candles up. Where do the candles line up? Let's start on the weekly chart. We call this top-down analysis. You can see here on the weekly chart, I actually already have a line set up. This line started at the bottom of 2020 and it's continuing. So you can see if you're on a weekly chart, you're looking at a pretty long time frame. That's why a lot of position traders will use a weekly chart. It's still good to reference though to see where the long-term trend is. Let's go back to the daily chart. What we would generally try to do here in this top-down analysis is what we call it. Right here is a trend line. This is where all your lines and you can put notes and all sorts of stuff on your chart. Click on the trend line. What we would normally try to do is try to draw from that point right there where it meets the longer term trend. But you can see here, like that's really not going to work out very well. So let's get rid of that. What I like to do in this situation is I like to start here at the most recent bottom and just pull back. Kind of see where can we get some things to line up here. That actually looks like it lines up pretty good, but there was definitely a definite change in the market here when this gapped up. You can see this gapped up and then we were on a steady trend up. So I think I'm going to use this bottom. I'll extend this out a bit. Let me zoom in. I want to show you how this is not a science. It is absolutely not a science here. So I'm calling this a candle that's lining up. That's a candle that's lining up right here. These two line up. This one lines up. It's not a science. And as such, technical analysis it's a foundational skill. It's definitely something you need to learn. But it's not going to help you to be consistently profitable alone by itself. It's just a skill that we need to start with. Okay, so the next thing that I want to show you is support and resistance. Support and resistance concepts are basically buyers will continue to buy this trend up to a certain point, and then they stop. They stop buying, and they just let the price fall, and it falls here, and they start buying it again. So what I'm going to do is I'm going to go up here, I'm going to grab a horizontal line, and I found these two spots right here. I'm going to go ahead and put a line in there. And let's find another spot here. There, see these candles kind of line up. Again, you've got a bunch of candles lining up here, a bunch there. This kind of lines up, and then it lines up with these ones over here. So I'm going to go ahead and put a horizontal line in there. Something else to look for is high volume candles. If you get a high volume candle, it's a price level that meant something. So right here you can see that when we talk about support and resistance lines, it's an area of support and resistance. It's not like a price 100%. You know, if we're you notice it lines up close to the 650 level. It's just a simple psychological level that humans like to trade at. They'll put in orders to buy at 650. So that's the level that it lines up at. So when I say a range, we're talking here 647 up to 653. So you would call it 650, but there's like a $5 difference there. It's a range. Let's put another line on, and then I'll explain a bit more about the concept of support and resistance. One there. We'll put one here. Okay, good enough. Let's focus in on this area. You can see that buyers were okay with buying it up past this resistance level, but they were not okay with buying it past this resistance level. So they'd keep buying, and then just stop and let the price fall back down. And then they were okay with buying in this 670 area. So that becomes supportive. Now the buyers are being supportive. We're just going to talk about the buy side right now, not so much selling. We're just trying to keep it simple at this moment. So it creates a little channel in here. The next time it comes up to that resistance level, the price kind of peaks through, but then it comes back down. Nobody wants to buy it. And now we're in a situation where there is some buyers trying to buy it up, but there's not enough buyers to hold it above there, so we come back down again and find support. You can see here how when buyers bought above this former resistance level, it then became support in the future. So that's very common as well. So now you understand the basic concepts of support and resistance, and you understand the basic concept of a trend line. If you want to be a day trader, this is more like a swing trading type chart. If you want to be a day trader, then what you do is you go down to a lower time frame. By the way, this drop down menu here, I forgot to explain this earlier. This drop down menu here is where you find your time frames. And I've starred the time frames that I like to look at so that they then appear up here. So if you're a day trader, you might start playing on the 4 hour time frame. I'm going to go back to a trend line. There's not really a trend in here. There might have been a bit of a trend in here. And then you go down to a 5 minute time frame where you're probably more trading off of, and you look for something else. You can see here that this trend line that we put on the daily chart, you would probably bring it actually down to here. Sorry, support line. If you're trading as a day trader, you would put something right in here. Why I'm showing you this is because when you're new, and I'm not going to say this very often because day trading is not great for most people, but when you're new, day trading gives you the opportunity to place trades. Whereas swing trading, there's an opportunity maybe once a week or once every 2 weeks. Position trading, you might not have an opportunity for once a month and so on, right? But with day trading, you can get several opportunities every single day to try and find some sort of little trend, some sort of little micro trend that you can trade off of. And in that way, you get to play. Now, I will say it again, most of you probably aren't going to have success with day trading. Historically, about 85 to 90% of profitable traders trade something other than day trading. It's only been about 10 to 15% of professional traders that have day traded successfully. So, keeping that in mind, the mechanics are the same though. The learning the trend lines, learning to place orders, those are all the same. So here is a good example. You might have on this day here, January 23rd, you might have drawn a little trend line up there. And say when it pulled back to this level, you might have bought there. And then it goes higher, right? Same thing here. So you can see how day trading can most definitely give you an opportunity. So this is something to play with. That's what this is. You're just learning. Now is the time to play with this. Here's an example of how I would get a setup going, a trend following setup. So I would take this pre-market area. Some people will say not to bother even paying attention to pre-market because there's not enough volume, but I have found that actually pre-market can be very helpful. So I would draw a line like this. Tomorrow, in this scenario, of course, this day will have passed, it will have come and gone by the time you're watching this video. But tomorrow, what I would look for is the price to hold this trend line as it comes into it, as like time continues, maybe this chops sideways, I would look to buy somewhere on this trend line. Now, if it breaks this trend line down, I would look to see if it's going to hold this support line. If it holds that support line, so one red candle, and then we have the next candle that's turning green, when the next candle turns green, I would go ahead and buy it. So I'm going to show you how you would do that. If you wanted to buy, you see there's a buy and a sell sign, you can actually do that. So you click that, it brings up what we call, or what they call, the trading panel. Go down here, don't worry about any of this other stuff. You just want trading view, paper trading, brokerage simulator. That's what you want. Click on that, connect. Now, I already have a bunch of paper trading accounts set up, so it automatically logs me into a paper trading account, and I have several. Uh, you might have to set yours up, but they'll walk you through it. Like it's just not a big deal at all. Once you have that done, then you can click on the buy sign again, and you'll get your order panel. So market orders are just at whatever the price is. Whatever price is available, you're buying shares at that price. And since there's so much trading going on, it's generally not a good idea to use market orders because you could get any price. You have no idea. There could be prices sitting higher or lower well, mostly it's a less favorable price that you would get. So what we do is we put in a limit order and that tells what price that we want to buy at. So for this example, if we were going to buy around 691, we would just drag that down to the price you want. You can adjust it here too if you want. You can put whatever number you want in there. You want to go 691.50, go 691.50. So now that you have this set up at the price that you want, when the chart comes down and meets this price, this order will automatically execute. It will automatically get you in. So the next field is how many shares you want to buy. So you want to buy 10 shares, you want to buy one share, it's whatever you want to buy. The next field is if you want to set up where you would exit this trade. So let's say that if the price gets back to this high right here from the previous day, that we're going to go ahead and take our profits. So all you do is you just drag it up into that area. Always got to have a stop loss, right, guys? Always have a stop loss. So where do we want to stop out? That's a good question. If this is our support line, I mean, we don't want to stop out right at our support line. We'll give it a little bit. What we'll do is we'll just come a little bit underneath there. This is kind of the previous day's open, which is also a key area that you could set it up as. So now you have a trade that's set up. If you left, this trade would automatically execute. And of course, remember, it's paper trading money. It's not real money. So it's just for practice. I would set a trade up like this. Just identify a spot, whether it's a support spot or it's a trend line that you found, and it doesn't have to be perfect. It doesn't even have to be right or correct. All you have to do is identify something that, you've got 3 points that are touching here and we're moving up. Will the price come back down? I don't know. Maybe. If it does, we're in. And you have a trade. You've practiced. This is one rep, your first trade. So that's a very simple trend following strategy. It's very common to use that more on a swing trading. A lot of professionals will use that kind of a strategy on the S&P for as a professional trading strategy. And it's also very simple for you to understand. So I'm going to leave it at that for now. We've showed you how to set up a trade. We've showed you support and resistance. We've showed you technical analysis as in trend following. Of course, there's more to it, but it's just a very simple start. Please let me know if you have any questions on this, and I'll see you on the next video.